Good morning and welcome back to the France Made Simple podcast, the podcast where I talk about life in France and tell it how it really is. Now, before I start this morning, I just want to remind you all that the French property exhibition is happening this coming weekend, the 24th and 25th of January, in central London. It's held every year at the end of January over 2 days, and it takes place at the Novotel, London West, and the tickets are free. Now, whatever stage of the buying journey you're at, this is the perfect opportunity to go along and chat directly with experts and browse the thousands of properties that will be there on display for sale. There are daily seminars which provide expert insight on a range of topics, including stuff like tax, legal, financial, mortgage advice, and you'll even get a free copy of French Property News when you arrive. So if you're even thinking about buying in France, I highly recommend that you pop along there, and you will be able to access those free tickets via a link in the description of this particular episode. So if you can possibly make it, I highly recommend that. It's a really good day out, and it's a really good way as well to get a feel for what's actually on offer and chat to people who are living in France themselves, which many of the agents there will be. You'll get a sense of what it's really like to be living and working in France. So don't miss this opportunity to access a complete ton of help and advice. That's my top tip for the week. Anyway, moving on. Now, obviously, there are upsides and downsides to living here, and obviously the upsides outweigh the downsides, or I wouldn't still be here. But one of the recurring complaints that comes up time and time again from people moving over here is the paperwork, the sheer volume of paperwork that needs to be completed, the complexity of said paperwork. I mean, you do have to complete everything in triplicate and provide documentation. It's just mind-boggling. And this is especially true when it comes to tax returns, which seem to strike fear into everybody. And it's not even February yet, but before you know it, tax return season will be upon us. So I thought it would be useful to give you a bit of an overview of tax returns in France, how they work and what's involved. Now, obviously, in the kind of space of time that I have on this podcast, I'm not going to be able to cover every single scenario or go into real specifics. And some people's tax situations are going to be a lot more complicated than others. But this is just an overview, and do feel free to get in touch if you have questions. So if you are fiscally resident in France, then you're going to need to complete an annual tax return. Now, this sounds daunting, as I said before, but if you do a little bit of preparation and, more to the point, you understand how the French tax system works, I wouldn't say it can be a pleasant process, but completing your French tax return can be surprisingly painless. So the first thing we need to talk about is, what is a fiscal resident? And again, I am not going to go too much into the minutiae of this because it is something that people love to debate, especially on online forums, especially if they think that it will be more advantageous for them to be or not be fiscally resident. People like to think they can find the loopholes, but generally there aren't any loopholes because it is what it is. So a fiscal resident, quite simply, is anybody whose main residence is in France, or who works in France, or whose main economic interests are in France. So, in other words, French fiscal residency is going to apply to almost everybody living in France, with a small number of exceptions for those people who may have, for whatever reason, dual fiscal residency. So, for example, even if, let's say, one person in a couple works in the UK Monday to Friday, but their wife and children live in France. Their main residence is in France. They return home at the weekends. Their children and wife and themselves will have carte vitales. The children are in school here. They will be considered fiscally resident. Now, if your home is connected to the internet, which let's face it, most of us are these days, you are legally required to complete your tax return and file it electronically online. If, for whatever reason, you don't have access to the internet, you can still complete a paper form, but there's always a but in France. You do need to be aware that the deadline for returning the paper versions is always slightly earlier than the online versions. So, for instance, in 2025, the declarations, and I should point out that the 2025 declarations concern your income received in 2024. They started in April 25, and the deadlines for completing the return vary slightly from zone to zone. You can find out the final dates for your department by using an online deadline calculator, and I will pop that link into the show notes. You just put your department number in and it will tell you which date your tax return will be available online to start completing and when it needs to be completed by. Now, if this is not your first tax return in France, you may be able to benefit from what we term automatic reporting, where basically the information is pre-completed for you. And this is starting increasingly to happen across France. But, like I said, there's always a but. This only applies if you were taxed only on pre-completed income. So in other words, salaries, and there's been no change. If this is your case, the tax office will get in touch with you in the spring and let you know exactly what taxable income has been withheld. But, another but, you do, however, still need to check all the other information that might have been automatically completed and confirm that this is correct. So, what is this other information? This is stuff like your family status and makeup. So, in other words, your marital status, are you single, married, divorced, separated? The number of dependents you have, which are referred to as parts in France. The more children you have, the more parts you get, the less tax you pay. It will also include income from wages and pensions, expenses that you might have paid for via what's known as the CESU, CESU, or le Chèque Emploi Service Universel. And this is usually used for services in and around the home, such as cleaning and gardening, or maybe homework help for your children. Or the Page Emploi, which is a similar system which allows parents to pay the wages and social charges of their childminders. And these outgoings, these expenses that you've incurred, whether it's for, childminding or gardening, they are tax deductible. But you need to check that they are on there and completed correctly. Now, for those of you who are fiscally resident in France, the taxation applies to all of your income, whether it comes from French or overseas sources, and it will apply to all the members of your household, meaning that their income and expenses are taken into account before establishing a household taxable sum. Now, adult children born between 2002 and 2004 this year must complete an individual tax return. However, they can choose not to opt for personal taxation and to instead remain attached to the parental household. So you need to work out which is going to be the better for your personal situation. Now, income tax in France is calculated on a progressive scale, which includes multiple tax brackets, each with a different tax rate ranging from 0% to 45%. The scale changes annually, and it's set in the yearly budget. So, for example, in 2023, the scale allowed 0% tax up to just under €11,000, then 11% tax for income between that and €24,500, 30% tax for income between 27.5 and 78.5-ish, and 41% from 78,500 to 100 and nearly 169,000, and then 45% for amounts over that. Figures change each year, so I've quoted some previous year's figures just to give you an idea. I'm sure they'll have gone up, not down, so make sure you check those out. And something called the family quotient is also applied when calculating your tax brackets. Now, this refers to the number of parts that I mentioned earlier, and the parts are the composition of your household. So that means that if you're a couple with 3 children, you will be paying less tax than a single person or a couple without children. However, this scale is only one element of the overall tax calculation, because income from different sources is going to attract different tax bands and indeed allowances. If you want to get a more complete picture, there is an online simulator on the French government tax website, which I will also pop into the show notes. But before you can do that, you kind of need to know what you are going to have to declare. So salaries and income from any form of employment is a good starting point. If you're paid overtime, you do need to declare this, even if around €8,000 of it is not taxable. If you receive tips, which are pourboire in French, you will also need to declare these sums, even if, again, they are usually not taxable. If you get benefits in kind, such as housing, meals, a company car, or equipment such as a computer or phone that are provided by your employer, they need to be declared, as should any personal expenses benefits. If you have children, some grants or bourses, as they're known, usually not the means-tested ones, may need to be declared. And any other financial benefits that you may have received as a result of an employment contract ending, whether it was unexpectedly, these are called the indemnités de rupture de contrat de travail, and they usually include things such as compensation or holiday pay, or what are called indemnités de fin de contrat or de mission, such as the prime de précarité, which is paid at the end of a short-term contract, which is known as a CDD or CDD, contrat de durée déterminée. All of these are going to need to be declared, and they are usually taxable. However, the equivalent of redundancy pay, not play, that's a Freudian slip, redundancy pay, indemnité de licenciement. These are partly exonerated and in some cases can be entirely tax-free. Pre-retirement payments, which are called indemnité de départ en retraite ou en pré-retraite, are taxable. However, again, in certain cases, a partial or total exoneration is possible. Now, you need to declare all of your pension income. In France, all kinds of allowances are referred to as pensions. Now, this includes retirement pensions, pension de retraite, as well as any kind of invalidity allowance, pension d'invalidité, and child maintenance payments made by parents if separated. Now, these are known as pensions alimentaires, and they are taxable, which always struck me as really unfair, but that's the way the cookie crumbles. And I suppose in return, single parents are able to access a lot of benefits here, so it swings and roundabouts. Pensions alimentaires, which are paid by adult children to perhaps parents or grandparents, maybe to pay nursing home fees or to assist with care, must also be declared, but they may be tax exempt for those on lower incomes, and they are also a tax deductible expense for the person paying them. Now, if you're retired and receive what's known as a rente viagère, you will need to declare this whether it comes from a property transaction or is from a savings plan, produit d'épargne de retraite, which is a bit like an annuity in the UK. Now, unsurprisingly, you need to declare all of your savings income. Some savings plans, such as those known as the livret A, le livret de développement durable, etc., are tax-free. There are loads of different saving plans, assurance vie, various retirement savings plans, share saving plans, and all of these attract different tax bands. You also need to declare any income and dividends from stocks and shares, and any capital gains from property transactions. You also need to declare income from any rental properties, whether they're furnished or unfurnished, meublé or non-meublé, and any profit made on the sale of shares. So this list of income streams to be declared is quite mind-numbing, but luckily, the gouv.fr website has a very easy-to-use feature, which is called Savings Selection, which will guide you through the process. And again, I will stick that link in the show notes. And last but not least, make sure you complete the section listing any overseas bank accounts held, because this is really important, and failing to do so can attract hefty fines. I think it's around €1,500 per account not declared. So absolutely make sure that you've declared all of your overseas bank accounts, online accounts such as Wise and Revolut, even PayPal. It all needs to go on there. And make sure that if your kids, especially kind of older kids, young adults, if they're still part of your household, make sure that you know which bank accounts they hold, and you add those onto the form too. And the same now goes for cryptocurrency. All of those accounts need to be completed. So it is a massive pain in the arse doing that, I can tell you, especially if you're doing it for multiple people and they've got multiple accounts, and especially with crypto exchanges and they're not quite sure of this, that, and the other. But it does need to be done. And once it's done, it's there for subsequent years. Now, one final top tip is that if you're making your first declaration and you haven't yet got your login details, you can call a tax information hotline, which is open Monday to Friday, 8:30 to 7 p.m., excluding public holidays, and they will be able to supply you with login credentials. Again, I will whack that number in the show notes. So I think my top takeaway from this is give yourself plenty of time to get organised. Don't be frightened of the process. Ask for help if necessary. I don't particularly advise asking for help online, because everybody's circumstances will be different, and there are a lot of people out there offering very misguided, if not disingenuous, advice. I recommend going to your local tax office and throwing them yourself on their mercy. They are normally incredibly helpful. They know the information they require. They will help you provide that. And it's a much less painful way of doing it, especially for that first tax return, which can be really, really daunting. Anyway, I hope that's been useful. I hope it's motivated you to start thinking about your tax return well before the due date. And this is especially important if you are going to pop along to your tax office, because obviously when tax season really starts and they're inundated with inquiries and they're overworked and harassed, they're going to be a lot less helpful and receptive to your queries. So my advice is, probably the toppest of top tips, is make that appointment, pop along there early in the process and find out exactly what you need to do. And then it's really not that bad. If you've got any specific questions, feel free to give me a shout, comment, or you can get in touch on social media, either via our France Made Simple Instagram page or on the website www.survivefrance.com. And I think that's all I can say about tax returns, other than jolly good luck. I hope that's been useful, and see you next time. Have a great week.